Hello and welcome back to Author's Note. Today we're going to be talking about an investment thesis based on the idea that the world's getting fat, rich and old, or at least it's getting fatter, the rich are getting richer, and pretty much everyone in the developed world is getting old. To talk about this, I've got Ben Funnell, who's a portfolio manager at GLG. You've been playing this thesis for a few years now and it's done very, very well across quite a few of these stocks, but now they're starting to look very expensive. Should we be thinking that perhaps the world, even though the world's getting fat, rich and old, investors have realised that and it's priced in?
Yeah, I think that's a very fair point. If we go back a few years, you had the luxury, really, in hindsight, of stocks which were likely to compound earnings in the sort of 10 to 20% range, sometimes more, but which were trading post-financial crisis on sort of low teens multiples. So to the extent that you were comfortable that growth rate would be delivered, you could be pretty certain that the stocks would also re-rate. I think the point that you make now is the right one, that they have largely re-rated.
So it's basically priced in. Well, there's obviously lots of different ways of playing this theme. The rich theme you can play through luxury goods, for example. If we bring up the first chart we've got to talk about, this is something that some people might find as a surprising way of playing the rich theme, but this is Macau gambling. Now explain, first of all, why one would do it this way, and then perhaps briefly why it, again, may be topping out.
Well, you can see that the growth rate in Macau gambling has been, on average, somewhere around 30% over the last sort of 7 or 8 years, and actually for longer than that. And it winged around a bit. You can see in the financial crisis, obviously went negative, recovered, and has been decelerating. Now, I think the reason for the growth rate in the first place is that, as people probably realise, Macau is the perfect way for rich Chinese people to get their money out of China.
So this is basically a combination of money laundering and avoiding capital controls.
I definitely wouldn't go so far as to say money laundering, but it's a way of getting money offshore into other jurisdictions. We have no idea about the source of money.
The rich people turn up, bet in renminbi and win in dollars.
Correct.
Yeah. Okay.
Correct. Now, what's interesting about this to me is there are some cracks appearing in this theme, notably the recent crackdown on corruption within China. One of the 7 new members of the Standing Committee of the Politburo has specifically been put in charge of leading the anti-corruption drive. We've had people arrested on the floor of Macau casinos, some of the so-called junket operators, and there have been also some selective bans on advertising for luxury goods and for gifting luxury. So it's all sort of bound up in the same theme.
So as the rich get richer, they'll continue to get richer, but it's much harder to express that as an investor to try and profit from it with Macau. The same for luxury goods, or is the luxury goods theme still a plausible one?
Well, we still, I mean, for interest of due disclosure, full disclosure, we are long these ideas, but given the re-rating, we're not as long as we were. So I think it's more a question about mitigating risk while still generally believing in the theme.
So basically share prices have come up a lot to reflect the fact that this is going to continue. The rich are still going to far outpace the rest of us. But investors have already recognised that.
Yeah, to a large extent it's factored into the multiple. Of course, the point I would make though is that if it can hold its multiple, which if you think the growth rate is there on a semi-structural basis, it should, then you will get, as an investor, the earnings growth. And if the earnings are growing faster than the market, clearly you'll get compounded rate of return faster.
You wouldn't expect in all these areas that more competitors will come in, more capital will come in, and that will drive down the size of the margin?
No, that's clearly the big risk. And you can see, for example, in cruises, which is an area where capacity has been growing on a fairly constant basis, that pricing does wing around a bit, and pricing does not grow more than sort of low single digit over time. So I view that really like the airline industry, a structural growth industry, but one where profit is driven by industry capacity.
Yeah, okay. Well, Ben Funnell, thank you very much. This is a plausible case then the world's going to keep getting fatter, richer and older, but there's an awful lot less money to be made out of those ideas than there used to be over the past few years.